Hello, 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 everyone. Good morning. Happy non-farm payrolls Friday. Hope everybody is prepared for another wonderful day of trading. Let's see who's here. We got Bob coming on in a couple minutes, so just hold your horses. Good morning, Jacob. Good morning, Davey. Good morning, Sashi. Good morning, Amit. Good morning, Ken. We'll get to the payroll numbers in a bit. Also, futures down and VIX rising. Yeah, futures popped and then dropped. Good morning, George. Can't wait to hear the closing bell ring. Exhausting week. Oh boy. So, yes, it has been an exhausting week. We'll get to non-farm payrolls in a bit. And remember, this afternoon, Fed Speak, big Fed Speak day. There's four listed. I think there's actually six Fed speakers a total. Davey VIX gapping up 31.20 pre. We'll peek in on that. But first, please do consider subscribing, ringing that bell, and hitting that like button so you know when we do the extra live streams like yesterday at lunchtime to just recap what happened in the morning and prepare ourselves for the afternoon. Don't know if we'll do one today. It depends on the price action, but that's why you should subscribe and ring the bell. Come back and hit that like button and leave some comments. I really appreciate all the extra comments that are being done. With that, well, real quick, hold on before we bring Bob on. I got to say good morning to Wavy. Happy Friday. Can't even hold a small bounce. Exactly. Will Fed change their view in reverse? Well, we can ask Bob that. With that, there's, whoa, ho, ho. You in Panama or something?
It's a cigar day. Non-farm payrolls day is a cigar day.
Cigar day. Well, look at that hat.
Try to put on my cigar hat.
You know what? If I feel like you're like in Panama, you're kicking back.
Florida
Wow.
feels like Panama today. It's about 104 degrees already.
And I wasn't referring to the Van Halen song. So, what are your take? I mean, you got an espresso?
Got the espresso.
Perfect.
Um, Honestly, if you watched the live stream yesterday, Mike and I were basically saying that any number was really a sell. Not any number, but within a range of plus or minus the expectations was likely to be a sell. A little bit stronger number was probably a sell because it means the Fed has room to be more aggressive. A little bit weaker number probably won't be enough to dissuade the Fed from the path we're already on. Looking at the breakdown of the numbers, the thing that jumps out at me the most is the labor force participation rate falling by 0.2%, should be about 323,000 people or so, dropping out of the workforce. So a lot of people don't know what that means. That doesn't mean over 300,000 people died. It means it's called a dissociated worker, someone who wants a job but has given up trying to find the right job. It's interesting right now because we mentioned the JOLTS number yesterday in the live stream. According to the JOLTS jobs openings, there is an opening for every single unemployed person in the United States, according to this particular 3.6 reading, right? It works out. Now, we all know there's more people unemployed than that 3.6%. But if you use this as the guide, comes out to about 11 million people or so, right? Somewhere in that range. And the JOLTS jobs opening has 11.69 million job openings out there. So if you want to work, you can. So this particular number to me is strong. Okay, just overall, the number's strong. You're looking at a bigger headline number, right? We're looking at a revision that was lower by almost the amount of the beat that we saw. So that washes out. But you're looking at the unemployment rate unchanged. Again, that's likely weaker because of the non-farm or because of the participation rate. So in other words, the percentage, and Mike can go through the math if you want him to, the percentage stays the same because the base number dropped, right? So it's not a positive. The average weekly hours worked dropped by 1/10 versus expectations, but it stayed unchanged. So that's not weakness or strength. And then when you look at the average hourly earnings, the increase was only 0.3, but last month's increase got revised higher. So that's flat. So this particular set of numbers does nothing to change the narrative that we've been selling equities around all week. So that's what this number turns out to mean to me. As you mentioned, the Fed speakers to me, I see four, Mike. Who are the other two? I
There
see
are
four.
there I was there are actually six. They're just not listed here.
Okay.
I mean, but we have enough to just know. Look, I mean,
Yeah.
starting in 6 minutes, woohoo! We got Fed Williams, and then I mean
That's
this
going to be the stuff
afternoon.
that could turn the markets around is the Fed speakers.
Yep. So
Um,
that's why it could be another interesting day. We have to be
yeah.
prepared for that.
So, but the non-farm numbers literally, it's a non-event because, as we said yesterday in the live stream, but somebody paraphrased us. Somebody said strong sell, weak sell, or something. I don't remember what it was. Someone in the chat paraphrased us, but that's basically what we meant, and that's basically what we're seeing. I'm really, really hurting my arm trying to pat us on the back on that one.
Well, it's don't. How can you reach around that hat?
That's part of the problem. Getting over this hat.
Sashi wants to know if the Fed will change their view in reverse.
Not yet. I mean, they certainly could at any point in time, but not off this number.
And not
Nothing in
off
this
of
number.
what you're going to leave inflation at 6 something or higher percent. I mean, oh boy.
That's the thing, Sasha. We've talked about this before. That there's if the Fed has success in reducing inflation, I mean, you're talking about a 4, 5, 6% drop in current inflation levels before they get to their target. That's not going to happen with a 150 basis point hike or even three.
Yeah, and that's their average target, so they'd have to have it undershoot for a bit just to get it. Because
Right.
if it were to stay at 2% now, yeah, we're at 2%, but your adjusted average,
Whatever that means.
your adjusted average would still be higher than 2%, even if you dropped it right now to 2%.
Yep.
So that's the problem. You got to get some of this out. Everybody likes your hat.
It's a
Wow.
good hat. This
It's
is
a
a good
good
hat.
hat. The only thing missing with Bob with this morning is him sitting out in front of a butcher shop. Gangster. Good
I
morning,
need the
Lori.
white and black suit to match it still. If
Yeah.
I have the white and black suit on.
Work for peanuts. With this kind of inflation, one cannot survive on minimum wage anymore.
Yeah. I agree
Uh,
with that.
uh, El Padrino in the house from Christoph overseas. Thank you for being here, Christoph. Hope your day's going well so far. It's already halfway through your day.
Love
Uh,
the use of Italian there, Christoph. Thanks for that.
then today will be a circuit breaker day. I don't know. Oh, I,
Could be.
any day could be a circuit breaker day, but I don't know. Interesting correlation year 2000 when market peaked in March. It took 6 months to break the 37.5% retracement to Asian crisis low. In month 7, we retraced 50% in 8, tested 62.5%. We were month 6, 37.5% retracement. Look at this. Look at options 22 using the harmonics and going back. Wow.
And Mike, by the way, I still got to send you that list of the things we're going to cover on the podcast today, but
Yep.
how you use the harmonics is definitely going to be one of them. But when we talk about those, I actually have something like that, options 22, somewhere on my computer where I measured out all the most recent bear markets because I was incorrectly telling everyone that you don't just come out of a bear market overnight. And I was referencing the pandemic bear market, and we literally came out of that overnight. So I couldn't have been more wrong. But I was literally doing it. I did the exact research you're doing without the harmonics. I was just looking at the amount of time it took to exit all these other bear markets and recessions. I have that somewhere. I'll try and find it for one of the live streams, but I love that kind of work.
By the way, just a reminder, we are still in very negative gamma, so we could see volatility each way. There's not much in terms of earnings unless you're interested in DraftKings, which was slightly up. But here's your S&P down again. We're off 62 basis points. NASDAQ off 87, 86 basis points. Dow down 46 basis points. But you can see this little pop in the drop. There's the pop and the drop on the S&P, or that was the Dow. Sorry, here's the S&P. There again, all the charts are the same. S&P, Dow, pop, drop, trying to recover. The Nasdaq actually testing yesterday's lows, so far holding. So that's going to be the key level today. Crude Crude still holding up after testing the harmonics. Crude's still holding up, but starting to watch for a little topping pattern up here. And this is a little valid double top. Do you have any thoughts on anything else non-equity related, Bob?
Yeah, I just sent you something. It's equity related though.
Well, then we'll jump back to the equities.
I just texted you.
It's all right. Let me jump back to the equities and put this up. Here comes the first. All right, you want to cover what you sent?
So this is how stocks have moved. I believe this was how stocks have moved. I should have remembered what that was before I sent it to you. Let's see. For the first time in May, here are the 50 basis point hikes and what the S&P 500 did next. Okay, so this is just another one of those Ryan Dietrich things, which is why I told you. We interviewed him on the podcast last week. For those of you that watch the podcast, it's up on the Pat Trading Partners YouTube channel. And I called him the voice of reason. And the reason I called him that is because it works with financial advisors. So his job really is to make sure when people are panicking that he shows them reasons why they shouldn't necessarily panic. Okay, but within this data is quite a bit. Look at the 12-month figures of the S&P after a 50 basis point rate hike, right? Especially that big block of them right there in the center. I don't know if you can zoom in on that, but yeah, those are right there.
What
You see that there's quite a bit.
I'm more interested.
There's quite a bit of red,
which was
Go
the
ahead, Mike.
80s, which was high inflation.
Yeah, well, that's what I've been talking about, right? And it's like when inflation is high and the Fed is fighting it, stocks struggle. So when you're looking at this stuff, it's now a threesome. It's not a binary relationship anymore. I don't know if I'm using that right. It's not just two things anymore, which normally we're talking about equity markets and rate hikes. But now we got to talk about equity markets, rate hikes, inflation, and also the fourth member of this threesome, so it's a foursome, is GDP and how it reacts. But that's what we're going to be watching the effect on, right? We're going to be watching the effect on GDP of all these things here. And I believe Ryan put this together because on the podcast, I told him that I took one of his charts that just compared inflation and stock performance. And I told him I added GDP to it. And you can see that a falling GDP is the sort of missing component. Stagflation, in other words, is the time when the stocks don't perform. And it looks like we're seeing that here as well, as Mike just mentioned.
Right. That's why I'm not as focused like in the 90s when inflation was relatively lower versus the
Right.
80s when you really start getting that, like there's a 100 basis point hike, 100 basis point hike, and because they're retaining stuff and it was slowing GDP in the 80s or in the early 80s, let me stress. And you can see look at this Fed funds rate upper range. Wow, 21 and a half. Whew. Boy, it would be amazing if we saw that again ever.
I know, right?
But so pretty much, is there anything else before I cover
No,
all the levels?
I'm good. Enjoy
All
yourself.
right. Well, thank you for jumping on,
Yep. Cheers, guys.
and we'll talk to you later, Bob. Have a great day. All right, everyone. Let's see. Back to small little mini Mike. If BTC USD and the markets continue to drop, what level do stablecoins like Tether begin to unravel? I think it's not. Well, what's interesting is you don't have as much printing, miraculous Tether printing out of thin air. But the real thing that's going to cause Tether to unravel is more. They have Chinese junk paper on there, and the more the markets go down, the more China's running into problems, the more they can't print. And their lack of printing, because they literally printing out of thin air, that means they can't prop up things like BTC with just fabricating money, essentially. So that's going to be the unraveling point, and then eventually they'll. I don't know what will eventually cause the complete collapse, but it'll probably be something like Bitcoin hits down around 20K, and then the whole thing just blows up in their face with all the fraud. ATVI will close at 24. Why is it 78, sir? Then we'll get back to the markets. ATVI will be closed at 94. Why? Oh, you're talking with the merge because there's still stuff going on if that's going to go through. So when stuff's closed down, when stuff, you still have the acquisition. When it's not being priced fully in, there's no guarantees it's going to go through. Just like, yesterday with Twitter, why did it pop a little bit, but it's still not at that 54? Because, the funding stuff was coming out with Elon was getting more funding partners. So it popped a bit, but it's still not where it needs to be if this was a fully done deal. Let me get back to these markets before we get into the open. Minor level on the S&P I'm watching. You can see here it's just above about that 12.5% harmonic, about 41.28. For any breakout play, though, longer term throughout the day, I needed to get to 41.51. Keep in mind, with the Fed speakers, anything could reverse at a moment's notice. We start breaking down. See here, this is a really ugly bottoming formation, but on the open, we start breaking down below 41.13. I'm watching for a retest of the lows from yesterday. And beyond those lows, you want your minor levels. This is where you use your little reverse harmonics off this pop. So 40.92, 40.86 would be minor. 40.73 to about 40.69 is major. If we do break down, I'll be watching. And then I'm targeting 40.56 and then if we'd really dropped 40.48 on the breakout, if we do break about 41.52 area, I am targeting then that's going to correspond with the 4-hour rotation. So then I'm going to 41.75 and I can use a little forward harmonics in there. I'll try to get that in options. Let me just get to this. By the way, the NASDAQ still has a potential double above this high. It's a little sloppy on the 4-hour, you can see, but it's nice on the 1-hour. Minor bullish level is 12.817. Major would be 12.919. 12, let me get you the exact level for the breakout, would be 12.922.25. Then you have a cluster here, 30.26, 30.85, 31.37. And so that's not just for today if that were to trigger. On a breakdown level, since if you see here, we're right at this sort of triple bottom holding. But if it breaks down, my next target is 12.605, and then major cluster area 12,500 to 12,460 in there. So those aren't necessarily just for today. Dow real quick, if you're looking at this, my breakout level is 32, about 950. Then I'm targeting 33,122 and then 33,232. Breakdown level is pretty much on momentum in the open around 33,725. Then I'm targeting a 33,640. And even if you don't trade these, you should watch these key levels because we break below there. 33,530, then 32,250, and then all the way down to 32,168. We just get to Russell. Breakout would be 1878, and then targeting about 1890 to 1893. Breakdown, I'm not doing anything on the breakdown until about minor would be 853. Significant would be 847. DAX was watching for that rollover play. We got that since longer term. It's still in bearish mode. DAX coming back down to the harmonic. Why isn't this going? There we go. Sitting here at 13,700. Below that, 13,577. Let me get to the Qs. Qs, you have a longer term double. We had that short little double finish or hit the second target. We're back down here pre-market. So that's pretty much, let's see if that's going to wipe out the double. Remember, stop reduction. And I did talk about this yesterday that we could easily see lower. That's why it has to be rising to stop. You start trading below 310.32, it's off. It's off the table, okay? If we do get a rally into the open and we don't trade below there first, your targets are getting you return to 313, 314, 348. You come back down there, though, your minor level would be 310.20, and then I'd use the reverse harmonics off of here on a break lower, 309.10, 310.57. So those are your major levels, and then below that, I mean, that is really not good. You start getting below that. Come on, line up for me. Then below that, next major would be 307.07. 39.05 SPY. You want the spiders. Okay, remember the spiders also hit the first target and now lower spiders. The key level that would invalidate that would be a return back below about 410.65 area. Then your double would be off the table, still trading 411 pre-market. If you rally back up, you're 413, 81, 414, 86, 415, 11 areas. If you break back down your minor, I'm just going to do these harmonics. These are going to work better. 408.57, 408.10, and 407.70. Any thoughts about Tesla buy day for a short trade? I mean, it's really going to tend. I'm going to be watching to see if it fills the gap here. Did not close below the 62.5, just hanging on there. But unless we get a strong rally in the NASDAQ, your first major area is back below the 200 on the daily. So I'm watching for key resistance 911 to about 915. If there is anything going on, there's no great bottoming pattern. We're going to have a very slight gap up. It's all going to depend on if we get some traction in the NASDAQ stocks. Your minor level I'd really focus on before 911 would be about 885. You have some major resistance on any level here. 885, let's just take a look at this bigger thing, because 885 also, about 884, 885 is their 1 hour rotation zone. So on the open, I'd really focus on this. You see this prior, it was support, resistance, support. Now watching for resistance. So before I target that 911 area and everything else, it'd be 885. If it does break down, would not be doing anything from the long side. You start trading below yesterday's low area. Okay, you start getting down below this 859 area. You're into a clear path move, and you don't have much stopping power until 828. So at this point, it's keying off the open because there are not any great setups here. We did not close below the 62.5. What's the play for this morning? I'm either watching, again, it's all going to be keying off of either a breakout or breakdown. I already went through with the NASDAQ. It's a breakout or breakdown play. NASDAQ, especially if it breaks below, you've already retested the low area from yesterday. You break down from there, watching for a continued move lower. Minor breakout play you can be watching even if you don't trade the NASDAQ. I'd have this up on your charts. You start getting above about 12,803 to 12,810. Easily you can make a run. Watch the 1 hour rotation zone with this little high area in 12,872. What gets me into bullish mode is if the NASDAQ, you get above this let me give you the exact level, 12,922.25. Then I get into bullish mode. Until that happens, everything's scalping, and we break below yesterday's lows. Unless we get a shake and bake pattern, it's going with the trade lower. Remember, there's still Fed speakers going on, so anything can happen today. You are welcome. Again, everything's going to be, today is going to be another tactical day. You got non-farm payroll out of the way, but everything's going to be either a breakout or breakdown play today. And if there's no momentum, we could be choppy. Why am I saying this and hedging everything today? Because there's no great patterns. We don't have everything. We've had a breakdown yesterday. You got a little break off non-farm payrolls. You're still against the long term. It's still in bearish mode. And anything has to be judged in this kind of environment with negative gamma to see if we either get the breakout or breakdown. The breakdown is my real area of concern because you see here on the NASDAQ, you have this major bottom that breaks. You could test lower. S&P, This is a bottoming area, and at this, based off where it is now, you're trading below all the closes. All right? You're trading below all the closes. So at this time, I'm really focused on the breakdown and for the initial first play unless we get a strong reaction upwards. But longer term, I want everybody to keep this in mind. Longer term, still if we trigger some of these patterns, longer term, we're still in bearish mode. So it's not like get super bullish. This is tactical. This is tactical for the next rollover play. Even if we triggered this double on the NASDAQ, look, you're then back to the daily rotation zone again. That's what I want you to focus on. Long plays are very short-term trades. Short plays are longer-term trades. And that's where I'll leave it today. We'll do a wrap-up this afternoon. It might be a little later. I am recording the podcast today. So I will be on the Jim Iorio podcast that will get posted either Sunday night or Monday. So if you want to hear my thoughts on a bunch of different things, and I guess I'll get asked about how I use harmonics, then you'll want to tune into that podcast when it is posted. Again, I really appreciate everybody being here. And with that, I'm going to wrap it up for now. I have to get prepared. I got open starting right now. Let's just peek at it. Nothing. We're starting to get a little selling, but again, don't react to that. We need a couple momentum bars either way before I get interested. And I've already listed the numbers, so I'll talk to you later today. Bye for now.